Good morning, Paul Georgie from Allendale. It's September 20th, Thursday morning, and we've got the USDA weekly sales estimates that just came out. The trade was looking for 350 to 450 corn, came out at 69.9. Pretty dismal sales there in corn. Soybeans 550 to 750 was the range, came in at 717.7. Wheat 350 to 550 as the estimated range, came in 488.9. So neutral on the beans and wheat, but definitely indicating that we do not have much demand for export business for corn, especially with the price relationships that we're seeing in compared to the Argentina and corn other places in the world. Other news that was highlighted here for agriculture is the USDA said last night that they're changing the release times of the major reports starting after January 1 from 7:30 to 11 o'clock Central Time. In order to, they did a lot of research on it and had a lot of comments. That's what they're going with after January 1 of 2013. The dollar is stronger here this morning, and that's, I think, weighing on grain prices as we speak. The disappointing flash PMI numbers out of China was certainly one reason for it. Japanese exports were disappointing. There's also economic data coming out of the EU, especially the Irish data was considered negative, and realizing that there still is a recession situation going on in the EU, and that is causing the euro dollar weakness and strength in the dollar, which is giving certainly some headwinds to this bullish attitude that we seen yesterday after the sharp break. Looking at price relationships, we've got corn for the week so far down about 25 cents, soybeans down about 75 cents for the week. China's trade overnight was quiet as far as the pricing goes. China's got about a week before they have their week-long holiday, so expect some adjustments here as we go into late this week, and that should create some uneasiness as far as the trade goes. We believe that there's a real battle here between technical traders and fundamental traders right now. The fundamental trade has been having their way because of supply concerns and production concerns here in the U.S. Well, that's pretty much over with. We've got the harvest pretty much done in the southern part of the Corn Belt. News out of the northern Corn Belt, the corn yields actually are a little better in some cases, in most cases in the Iowa, Minnesota area, but still below the normal range in those areas. Soybean yields, however, are coming in as surprise in many cases, better than what the producers were expecting. So we could see some weakness there, and now the demand side of the equation is the important thing that fundamental traders are looking at. We are hearing and rumors yesterday that China was in buying anywhere from 2 to 20 cargoes of soybeans. We haven't seen any confirmation of that. We'll be watching the 8 o'clock time frame when the USDA announces their daily export sales. So keep that in mind. But the technical traders are looking at the weakness that we've seen this week. The 50-day moving average in soybeans is a key going into the Friday close. And if we close weak, many of these technical analysts are telling me they've got chart projections for corn down to 680 in the December contract, where there's a gap on the charts, and then 1480 in the soybeans November contract, where there's also a gap on the chart. So a battle going on, and without new fundamental news, the technicals just may get their way here. So be careful of that, and use proper risk protection if you're trading these markets. In the livestock news, we had egg set announcement yesterday afternoon, 2% increase from a year ago. Chick placements were about even with a year ago, so not a real indication there that the poultry industry is reducing size because of feed prices, but something to monitor very closely. We've got the pork industry, however, I think is giving us some indications that we've got the biggest supply of hogs behind us here. We're starting to see weights go down. Yesterday it was reported that the Iowa, Minnesota hogs are coming in about 1.6 pounds less than a year ago, or less than a week ago, which is giving some indication that maybe we're getting this inventory cleaned up, and we could see some consolidation here. However, the price of meat has not shown that yet. We were down yesterday 88 cents in the pork cutout values. In the beef, cutout values there were higher in choice, up 65. Select was down 4. Still waiting for a good solid trade in the cattle as we go into the weekend. We do have cattle on feed report coming out on Friday. That's cattle on feed there is estimated at 99.9 as a trade average. Placements 94, and the marketing's at 98.4% of a year ago. So a lot of things going on. Again, a lot of reasons to stay in touch with Allendale Advisory. We've got the Ag Leaders webinar next Tuesday, 8 p.m. Go to our website, get signed up for that. We've got a lot of interesting things. Rich Nelson will give us some more details on price projections and where he thinks the economic value is on this corn and soybean market. So you can reach us at 800-262-7538. Wish everybody a very successful trading day, and we'll talk to you tomorrow morning.